Welcome to the webinar on India Gold Market Trends presented by Mr. Somasundaram of the World Gold Council and hosted by GemAtlas. We hope you take this opportunity to ask all the questions that are lingering in your mind about the gold market in India and are as interactive and respectful during this webinar. Thank you.
Reasons and how this market has evolved, you see that rural income is a very important ingredient for this demand. And when we look at India, doubling of farmers' income is very positive for gold. Monsoon dependency is also reducing. Weddings and religious occasions within this plays a very large part. People buy and gift jewelry during weddings. 70% of the demand of jewelry comes from 10 million to 12 million weddings in a year. That's what India sees. It is a growth market because 45% of our population is below 25 years old. So there will be weddings as we go for the next decade at least. And the average bridal jewelry is about 200 grams. So that's quite a very good demand support. Again, when it comes to India, we have easy liquidity, we get loans very fast, that adds to the attraction of gold, and there is a growing middle class. As the government's measures on growth, push more and more people out of the poverty line, actually we're going to be eradicating poverty and people move into the middle class in the next four years, you will see that even if 1 gram of gold is bought, you've got 250 tons per annum demand coming through. So it's actually, there is a latent demand from this section, and it is a second most preferred asset class after bank deposits. We had done an analysis, econometric analysis some time back, and we studied how gold price and gold demand reacts to price changes, inflation, and rainfall. That's what you see at the bottom. See, for every 1% increase in inflation, demand increases by 2.6%. This is about a 25-year regression analysis we did. For every 1% increase in price, demand goes up by nearly 1%, say 0.9%, for a price change in the short run. This was short run. But in the long run, what we saw was a 1% increase in income leads to a 1% increase in demand. But a 1% increase in price leads to a 0.5% decline in demand. So what does that tell us? Income is a great determinant of demand, not so much price of other stuff. So the demand in the current Indian context reacts more, long-term demand reacts more to income. And as the country gets prosperous, so we don't have to worry too much about the long-term trend. Of course, rainfall is also a factor. As I said, the loan against jewelry keeps the gold savings very potent. While people continue to say that gold industry is, gold is very unproductive, etc., actually it's not the case. You put the data and then you see how this has never been presented. Look at 2018-19, nearly about as I said, US dollar 40 billion. It's more than a year's import is actually held as collateral by various banks and NBFCs. It's not only NBFCs, let me make it very clear, Manappuram and Muthoot are known, but every bank gives it. Actually, you'll be surprised, banks hold about 70% of the gold loan business. Only 30% is held by the NBFCs, but they grow faster. But still, $40 billion, it gives bank credit to people who can't otherwise access. Again, quickly, gold has issues as well. There is gray market. People estimate there is a huge tax evasion, which is possible because of the way gold is bought and sold in the country. It is a very fragmented industry. There are quite a lot of artisans and 400,000 jewelers. But if you see, average sales is less than 1 or 2 kgs, and quite a lot is in cash. So it is not perceived to be progressive. It has not been able to make a good case for itself. That is a big disadvantage for the industry. There are definitely organized players coming now. Nearly about 40% is organized in the organized trade in this market, but still 60%, as you can see, is unorganized. And there is, of course, very low value addition because even in the best of handcrafted jewelry, at the end of the day, how do we sell it? Kitna gold hai, kitna labor charge hai. Whereas you look at China, the value addition is very high because they do a lot of innovation there. So that again puts a lot of pressure on the government, because while they like gold, they like the jewelry employment, it is not giving that much value addition. And that is why our exports are also not growing. And then, of course, there is always this opaque recycling market, undercarriage is rampant, and there is not price transparency. So you ask any customer, all these factors come through in various studies. What is the other issue about gold? It's such a big market, as I said. What is the other issue? The current account deficit, because we require dollars. And you can see of late, many bankers have also started writing about the fact that, the growth is affected because we are buying a lot of gold. Of course, that is also happening because we haven't been able to present the advantages and how gold adds to the overall economic value addition. It has been done, but I think because the industry does not have a single voice, as I said in the previous chart, it is unorganized, it is just disjointed. There is no single voice making a case for gold. So CAD affects gold, because of which every time there is a trade deficit, it is a second. Now, of course, it is a third item after oil. Oil comes, electronics comes, then comes gold in terms of imports. Therefore, every time there is a problem that the government has on rupee-dollar exchange rate, they clamp down on gold, which does not give a good base, a good platform for long-term investors. You need people to be able to invest in any business in the long term. But when every once in a while you're going to be faced with some headwinds, now you are not going to have investments. We have seen some private equity coming into the market, but if you see that, they consider this market as very unstable because of the policy changes. So broadly, second largest consuming market, it consumes about 25% of the global demand. India and China together account for 50 to 60% of the total global demand for gold, physical demand. So it is the second largest market, but 90% imported, low value addition, limited domestic supply. So it affects the current account deficit. The policy making is uncoordinated. It is a fragmented industry, and it is lacking in transparency, at least in perception terms. Tax compliance, these are issues. Shrinking of a manpower-rich industry. The industry has been shrinking ever since demonetization was introduced. Role of gold. There is a reality, which I said, $40 billion people have taken loans. If the gold was not there with them, they would never have access to banking credit. But they are getting it. But we have not been able to make a case. That's a reality. But what's the perception? Oh, people buy gold and store it at home. It is an unproductive asset. This is the perception. So we have not been able to change the perception of gold as a very valuable economic asset. Nobody has gone to the public to say, had we not held gold in 2008 when the markets melted down, we would have been a poorer country. But you need a single voice, economic voice to say all this. Lack of standards, that's again another problem facing the industry, lack of price transparency. These are the things that come to the top of the mind in any discussions with the government. These comes up. Oh, there is no purity. Oh, prices all over the place. You cheat customers. Things like that. They don't realize that the amount of relationships that this jewelry industry brings. You could do so many things with the jewelry connect with their retailers. And now we have not leveraged it at all. Gold losing shine amongst millennials, that's another problem because of all these issues. And international influence is not commensurate with the buying power of India. Now I will go fast about the demand. What has happened to demand? In 2019, globally, we saw demand was up 8%, largely led by two factors: central banks and exchange traded funds in the US. In the US, as you know, people do buy physical gold, but they also buy it through ETFs. We also have ETFs, but we have just 1 billion. In the US, it's about $100 billion. And Europe also buys through ETFs quite a bit. Jewelry demand was steady, largely driven by India. Bars and demand coins were low because of China. So, as I said, record-breaking central bank demand. For the first time in 50 years since the removal of gold standard, central banks have bought the highest amount of gold in a year. They bought nearly 660 tons last year, and they continue to buy. And you'll be pleased to know that even Reserve Bank of India is buying, which I'll cover in a later stage. So that was one big driver of demand in half one. Central banks bought a lot of gold because they want to diversify from dollar. You don't know what is going to happen to dollar. While you can't do away with dollar, but you always want to diversify. Exchange traded funds, as I said, highest assets under management in 6 years. Now, as of date, as we speak, there are 2,800 tons held by the asset managers in the ETFs in US and Europe. So that continued to drive demand in the first half. And if you really look at the non-ETF US market, which is a big thing, at the end of the day, US drives price, while they may not consume as much as India. Why? Very important, because gold is important even in the US. You see that the market has gone up back to the pre-financial crisis levels, which means people are coming back to gold. At the time of Lehman crisis, they went for gold. And now you are come back to the same level, actually, which is good for gold. Mine production is also hitting record highs because many of the mines which were invested during the last decade have now started yielding. But as you know, you can only increase so much through mine, 1%, 2%, etc. And that is why people trust gold. Paper currency can be printed tomorrow and it can lose value. In gold, you've got to work to sweat the mine, and many mines are becoming more expensive to take gold out. Earlier, what used to come out of 1 ton of earth, you get hardly half a gram or 1 gram of gold. Not even 1 gram, there is milligrams of gold for every 1 ton of earth that you take out. That's the cost of mining gold. And that is what gives gold the value. You can't increase supply in the short run. Recycling is another form. 2/3 of the supply of gold in the world, generally, every year, comes through mining. 1/3 comes through recycling. What is recycling? When people go and give gold and walk away with cash. Not the type of recycling our people do. They take the grandmother's jewelry and exchange it for jewelry. That is not considered in the supply. That is gold for gold. This is gold for cash. Now, gold for cash is 1/3. Generally, whenever prices go up, people recycle a lot more in Europe and others. So this again accounts for 1/3. In India, generally gold for cash is about 10%. Right, this is the broad picture of this thing. I won't dwell on it. You can see this is from Reserve Bank Handbook of Statistics. How much is gold? How much is imports and exports? You can see gold exports is hardly 4% of total exports of India. But if you really look at the import, $32 billion, look at the figure here, $32 billion is the total amount of gold imported. 32, 33, 27, that is the range. Look at our exports, hardly 18 billion, 11 billion, 12 billion, 13 billion, 14 billion. That's the kind of thing. And on top of gold, you also have, precious stones and diamonds and things like that. So you actually import $63 billion, but you export $40 billion. Now, this is what puts pressure on our CAD. So this is just to give you a broad this thing. India's demand specifically, as you can see over the years since 1995, for those who are interested, they can pull the figures from our website as well. India has kept the gold demand going up ever since the Gold Control Act has been withdrawn. But as I said, it grew in a very unorganized manner, unlike China, which opened the market in 2000 and actually started off putting a structure. They first started the spot exchange, Shanghai Gold Exchange. Then they said everybody should buy only out of the Shanghai Exchange. So they slowly opened up putting the infrastructure. India opened it up and now we are trying to put the infrastructure. That's the difference. But if you see, as I said, demand has increased by 9.2% in half one. And over a period of time, this graph is the GDP graph. As I said, as the GDP keeps growing up, the growth rate, the demand has remained more or less about 800 to 900 tons. And we continue, of course, demonetization period, you can see it dropped significantly. And ever since it has lost about 200 tons because people are worried about buying gold, showing their PAN cards and other stuff. RBI also purchased 60 tons, as I said, since December 2017. It's essentially a diversification from dollar. And very quickly, what happens to the listed jewelry company? There are very few listed jewelry companies. They're not very, very big. And Tanishq is one of the biggest. As you can see, how is their sales doing? Now that we all know that prices have gone up to 38, by 22% in the last 4 months, how has the sales done? Definitely, this price increase is a headwind. And you are seeing the price has jumped and then come back in quarter 2. If you see it has come back. Now I'm told in quarter 3 it has been worse. Yesterday we saw the figures of Tanishq as well. But the stock price has recovered. This is as of a particular date. So this keeps is very dynamic. But suffice to say that jewelry companies are facing the headwinds of the increase in price and the increase in duty. But as I said, long term, it is income which is going to drive demand, not the price. Yes, you will see some people standing off from buying because the price has gone up. But as the incomes go up, you will find gold is always a role to play. Now, having said that, this is how the market is. So I'll very quickly now go into what is the case for gold. I spoke about it. Why do people buy gold? It's very important for us to understand. We all know, we buy gold for weddings, we buy gold for, children's education, daughters' marriage, whatever it is. But broadly, what drives gold demand? Drivers of gold. Economic expansion. As I said, as people get richer, they would like gold as a long-term saving. That happens in US, Europe, Germany, India, China, you name it. Some people will hold it as ETF, some people will hold it as jewelry, whatever. Risk and uncertainty. So whenever you get rich, you think of gold. Whenever there is risk, you think of gold. And today the market is reacting to risk and uncertainty. So gold plays a role in every economic situation. When there is uncertainty, you turn to gold. There is also an opportunity cost. This is what you find volatile. Sometimes you find when Lehman collapses, there is a huge buying of gold in ETF. And then 2 years down the line, once QE starts, you find that the ETFs sell down. But there is still an opportunity. You find this opportunity very often. Like the price of competing assets such as bonds, currencies, they influence the investor attitudes towards gold. And last is momentum, which is purely the speculative position. All these 4 affect gold demand. So when you say global demand is down, you have to distinguish between whether it is consumer sentiment or is it just a momentum flow which has moved out. Some of the ETF inflows of the 2,800 tons I spoke about will move out when you find that there is some other bond which is giving a little better money. Okay. Today, $16 trillion worth of bonds in the global market is yielding negative interest rates. That's why gold is doing so well. $16 trillion. What does that mean, negative interest rate? Many governments now are issuing bonds for 100, but they are saying you will get 98 at the on maturity. That's the way it is. But people are still doing it because there is a form of what I would say, fear, recession, blah, 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 blah. The debt bond market is in such a situation. One of the reasons why gold is doing very well now. So coming back, gold also has 4 uses. Jewelry, there is technology. We all know about the golden tooth. We must know all the car entertainment, all the mobiles. Everything has a piece of gold. And nearly about 400 tons in a year is used in technology. So jewelry and technology is one. Investment gold, which is bars and coins, and ETFs. And last is central bank. This is how the global demand is split into. If we look at it, jewelry and technology, whenever there is good economic performance, when people's prosperity increases, they go and buy this. They buy more cars, they buy more mobiles, which all has gold, they buy jewelry, right? When you have uncertainty, when you have fear of a war, fear of rupee pressure, inflation, you buy bars and coins, and more of it, I'm saying. And central banks will do both. So this is why gold is very, very good and is used as a diversifier by central bank, because it is there useful both in a period of expansion, prosperity, and in a period of uncertainty. and role of gold in a portfolio. I'm going to go through it very fast because there are lots of this thing. Basically, gold is a very good diversifier. See, gold doesn't give a coupon, unlike a bond. But what gold does is, when you have equities, bonds, and gold, we have always found it is a very good diversifier. That portfolio performs much better than a portfolio without gold. Because gold is an insurance against, as I said, uncertainty, as well as when expansion comes. So it gives returns against other returns. It is a diversifier tool. It reduces volatility. When bond price comes down, I'll show why. And it has quick liquidity. It is a very, very deep and liquid market. If you really look at it, look at the Indian government bonds, USD INR trade, equity, and gold. So it has got good, and this is of course the Japanese bonds. So you have a very good liquidity in gold. That is why gold is preferred in whatever form. Even if you have a jewelry, well, you can sell it as a, you can melt it and sell it in the market. Okay. And we all know about 91, and the government itself had to, borrow. Gold came in handy. The returns of gold as compared to other assets. Look at it to last 20 years on the left-hand side and last 10 years. It has delivered a good return as compared with every comparable asset class. Stocks, bonds, commodities, Indian government bonds. You can see this, this gold is the golden color here. Everywhere it is it is comparable. And look at the last 10 years and 20 years. You have got stocks, bonds, and gold here on the left-hand side. You can see it is quite comparable. On a 20-year basis, of course, stocks always give a longer, but it's also more volatile. And for people who can't stand the volatility, it is difficult. But for gold, you can see the way it is. It is very comparable to a bond in all these cases. So this is also a very important factor for gold. And the other very important thing is it is negatively correlated to other assets. What do you mean by negative correlation? When stock goes up, gold will not do well. When stock comes down, gold will do well. When bonds do well, gold will not do. That's why I said gold is more like an insurance. If gold doesn't do well, you must be happy because it means the rest of the economy is doing very well. Okay, but you just hold on to gold. Our housewives know that very well. That's why they always kept it and said, "Don't touch my gold." You come to me when you have a serious problem, which I will do it, but otherwise don't touch my gold. It's a prosperity, a sign of prosperity. And everybody deals with it, including governments for that matter. So you can see here how it is negatively correlated to a corporate bond, government bond, cash, and stocks. Negatively correlated. So when these don't do well, you have gold doing better. Gold also helps in downside risk management. What does this mean? This chart again, I can spend quite a lot of time. All that it says is when Sensex, or when the comparable thing Sensex falls by more than 2 sigma, that is it against the average it falls, then you have a correlation which is negative, which means gold will be better off. The correlation is more negative when it falls. So the worse the stock market performs, the better gold performs, which is why it is a great insurance. So when you have equities, let's say 60% equities and 20% or whatever, 50% equities, 30%, depending on individual, if you hold gold, your negative correlation helps you. If the stock market falls, the gold will absolutely hold your portfolio up. If it is positively correlated, what happens is when stock market falls, it will also fall. Then you will lose more wealth. That is the whole idea of this. So here again, we did an analysis. What we have done is an average PF portfolio with 2% gold, 5% gold, and 10% gold. Can you see the return, how it would go up based on monthly data from 2008 to 2018. So if you had 10% gold in a portfolio, it would give you from 2.35%, it will probably give you 0.35% more return. You see that? So this is the value of gold. So price dynamics, as I said, US US Fed rate drives the expectations of price, and you all know why price went up. One of them is US interest rates were supposed to be going up, but very late last year, they said, no, the economy seems to be going into a recession. It is not in a recession, but people are having fear. Therefore, we are going to reduce the rate. So there is a 180-degree change in the US Fed decision. That has caused gold to go up. So this Fed rate expectations versus the gold price. If you see, gold price is here, and the Fed rate is about here. So the point that the chart makes is that given the expectations, the price seems to be supported well. And COMEX is another. COMEX is not a physical gold market. It is it is the futures market. It drives the price even in the physical. If you see, look at the amount of long. Long is, when people have actually expecting the price to go up, they go long. And this is the short. The net long, if you see, it is as high as it was when the price was high in July 2016. So it is very well established. Very well positioned now for price. So I'm coming to the last 3-4 slides, and then I will open up for questions. We have seen that India's demand is 800 to 1,000. It's doing well, although it has fallen since demonetization. And overall, gold in a portfolio adds a lot of value. Gold price looks, given what is happening in the US and various trade boxes, gold price seems to be well set, and it is well supported. And as I repeatedly say, it is negatively correlated with all the risks around us. Gold is a good portfolio. What is happening in India? We saw a duty increase, etc. So what is the gold policy? What is our policy towards gold? Are we always going to say, gold is a bad asset, don't buy, but continue to buy 800 tons with lots of issues, which we saw, gray market and all that stuff? Or are we going to do anything different? Now, gold policy, we have been very seriously focused on import controls. Now we have to move to a regulated asset class. That must be the focus, not import control. You have a domestic unorganized industry. You don't have to look at it. You have to think of making India the global gold hub in various forms it's possible. Gift city is there. We have enormous potential to make it we are already consuming more. We got to leverage our position. And from a marginal player in exports, we have to become the jeweler to the world. The total exports of watches, Swiss watches, do you know how much it is? $18 billion. All sold on the basis it is handcrafted. And here we have an industry which thrives on handcrafting jewelry. It's not able to export. That's obviously something we need to do right to get our status as a jeweler to the world. And that's what important. So broadly, I've got my 3 slides more, and I will open up to questions. We did give some, work with the industry. We came out with what the policy should do. If you see all my slides, you'll see one is consumer protection. Anybody buying gold should be absolutely clear that they get the best of gold in India. No fears about wrong price, wrong purity, nothing. So we have certain steps, policy steps to be taken: hallmarking, good delivery, data transparency, fair and effective markets on price, etc. And we have got all these details. I'm not going to go into the details. You have to organize the market, which is why we are talking about a spot exchange. We need a bullion banking, we need accredited refineries, and we need better logistics. Household financial security, how to increase it with gold. Gold monetization, it has to work, absolutely. We need more gold-based products through the banks. Why should I always buy only physical gold? Why can't I go into a bank and open a gold deposit account and say, here is 100,000 rupees, please give me 30 grams of gold, whatever, right? Open the gold, and I will come back and take it 7 years later. I don't want to buy 1 lakh gold jewelry and then give it to you as a monetization. Open it up. We can have a gold-based insurance. If people buy gold as an insurance, why can't I go back and say, here is an insurance. If anything happens to you, your family will get 500 grams of gold, 300 grams of gold, 100 grams of gold. But premium will be taken in rupee. Now, these are all things we need to look at. Access, again, what we mean is digital. Integrated into the financial system, what we mean is KYC. And, if you have to invest even 1 rupee in mutual fund, you have so much to go through. Now, why should gold be any different? Then, it gives the confidence to the government that, okay, gold is also regulated. And and then you will have foreign investments coming through. You can do your business cleanly. You can plan for the long term. And last is employment, which is innovation, gold tourism, Indian gold coin, and skill development. We have had 3 gold-related policy milestones in 6 years. First time was in 2015 when the Prime Minister opened the Indian gold coin, sovereign gold bond monetization scheme. It didn't work. And then we had the Niti Aayog committee, which recommended 84 ideas to the government across 20 areas. And then followed by another new budget announcement, which said we will have a comprehensive gold policy, we will have a spot exchange and a monetization scheme. And industry is working on it, but the progress has been slow. Again, primarily, I would say it is to do with the fact that there is, and Niti Aayog, as I said, has given some really solid recommendations to the government. I'm not going to, drain the slide, but you can see there are really, really long conversations and which have, crystallized into some very, very serious recommendations. It's now up to the industry to drive these recommendations with the government. The point is there is our attention also is limited to duty reduction and some circular from customs duty. We are getting lost in operational things, which is very important. I'm not saying it is not, but what is happening is the lack of a single voice and attention to minor items rather than the broader strategy has also started affecting the industry. It's important for the industry to come together. So this is what it is. India is it's as I said, second largest gold market. We even have mining potential, as you can see in one of the reforms here. We need to drive and help the government to make gold into an asset class, something which can be used. Just to give you a data, the amount of gold with us is 75 lakh crores at the lowest estimate of gold in households, even if you take the last 25 years imports, is about 75 lakh crores. I just want people to go back and look at the Reserve Bank report and see what is the amount of savings and current account deposits in the banks. You will be surprised. You have as much gold as you have in the banks, etc. So why should we not leverage this asset? How do we leverage this asset? So these are all questions before us, and the most important thing is how do we take this forward as an industry? Gold cannot be wished away. Indians will always be big gold. I mean, if you big in gold, to see even our past history, we traded spices for gold. There have been even a book which I read recently where it said the Italian rulers were very scared. They said all our gold is going to India, and our people should eat less spices. This is the merchants of South trade or something like that. So that is how our passion is developed. So we are not going to just move away from gold. What we need is do it slightly in the more innovative way, modern way, so that it doesn't affect the government finances. So it becomes a mainstream asset class rather than one which you buy when you have unaccounted wealth. That perception has to go. We have the best of talent here, and as I said, $18 billion. If pure watches can do, imagine how much exports we can do on gold, handcrafted jewelry. That must be our main focus. So I'll stop here and start taking questions now. There are lots of questions here, so I am just going to read a few of them and then answer a few. Is that okay? The time now, I've taken exactly 35 minutes, so I will spend another 15 minutes. How come a few weeks back, gold reached 40,000? As I said, that has to do with Indian price has 3 elements. One is the LBMA price, which touched 1560 at one stage to an ounce. Ounce is 31.1. On top of it, you have dollar rupee exchange rate, and rupee was weak, so that was also there. And on top of it, the duty. So all these things made it reach 40,000. Is China responsible for recent gold price increasing? No, China has also suffered because China did not buy enough gold. Bars and coins drop was essentially due to China, because their own currency was also responsible for people buying less of gold. How can WGC increase gold demand through jewelry or other products? which can help both G and J sector and the gold sector. Very good question. How can we increase gold demand? You see, in the first decade, 2010, etc., we used to help the industry with Akshay Tritiya and others. But after that, we said that this industry, the jewelry, has become mature. So we work more on policy and supporting with a training center, etc., training institute, working on policy matters and all that stuff. What we have seen over the period of time is our entire marketing has become price-led. If you see every study that we did, the marketing gap is big. We don't talk about any of the good things of jewelry. We talk about only one thing, and I challenge each one of you to take any paper, and you are going to see more of it in the next 1 week. You will see nothing but free of labor charge, 10% off, 30% off. There's nothing which says that this is this style of good, this is produced by so and so, it has changed forehand. We have somehow missed the marketing road. We are just moving towards selling jewelry as gold. That's the problem. Yes, how are we going to do it? We are definitely talking to the industry to form an innovation program. It's not a center, it's a program, so everybody can be benefited. I am hoping that the associations will also join hands with that. The problem is, the concept itself is very different. The moment we talk about innovation center, people think it's a huge building with lots of things. We're not looking at it. It is an ideation creation center. We believe it will strongly drive gold jewelry demand. Will there be a fall in the price? We don't comment on price. We don't forecast price. I have shown you enough charts. Just track the Fed rates, and you will know what's going to happen to gold. Shouldn't the government of India start giving tax exemption? It's very interesting you asked this question. We did a survey for 3 consecutive years. We asked consumers, about 13,000 people we asked. We asked consumers, what is the range of taxes you pay on gold? You'll be surprised. I didn't put up that slide here. You'll be surprised. 98% of them had no clue. Because the consumer does not know what is the customs duty. They only see the VAT earlier and now the GST. They have no clue that it is 12.5 plus 3. Earlier it was 10 plus 3.5. No way, and 98%, and it's not a small sample we're talking about. The issue here, the reason I'm quoting Mr. Deep has said, is the consumer is not asking for exemption. Yes, a price reduction is good, but if you can pay 20% increase in gold price because of global factors, paying another 2.5% should not matter. I'm not supporting it, but I'm just saying that is not the focus of our discussions. Our focus must be, what does the consumer get? Does she get the purest gold? China is today talking about 5G gold. What are we doing as far as innovation is concerned? Not just designs. We have got some thousands of designs, and you walk into any shop, or actually, do we need so many designs, or do we have to do something else differently? So the common man has to increase. There are 2 ways we can do it. We have to, first of all, organize this industry and make people feel that once you have bought jewelry, it's a big asset class. Now you are saying that somehow get a piece of gold. Doesn't matter, you don't have a bill, don't worry about purity, then you are richer. That has to move. Then only our exports also will move. Does the World Gold Council market gold through different government schemes? No, we don't. We don't deal in gold physically. When I say deal in gold, we don't buy and sell gold or anything like that. No. What is sovereign gold bond? Sovereign gold bond is a paper issued by the government as part of, I showed you the chart where the Prime Minister launched it. It's a very good scheme for those who like dealing in paper gold. There is no gold backed, it is government promise. But what it does is, you can buy 100 grams of gold today at a certain price. They have just opened an issue. Your certificate will say you own 100 grams of gold. Say they have now issued it at, I think, 38,000. Okay, so if you buy 100 grams, it's 3,80,000, whatever. Now you will hold it, and for 3,80,000, you will get 2.5% interest every half year. And at the end of the 7th year, you will get 100 grams equivalent gold price. So at that time, if the price is 45,000, you will get 100 into 45, 4.5 lakhs. If the price is 30,000, you'll get 30,000. So it's like holding gold only, but you have 2.5% interest on the face value, and you also can use the same thing and get loan, etc. So it's a very good scheme for those who are who have a demat account and that stuff. What is the highest price gold has ever seen? It is the 40,000. Last time when gold price went up to 1900 also, it touched Indian price only touched 35,000. This time, even at $1,500 gold price, you're seeing 40,000. So this is the thing. Since the rate of platinum has affected gold, now is the most precious metals in the world, so only as an easily convertible to liquid cash. I feel price will go up well at this time of market recession. Do you feel the same? As I said, Jagdish, we don't comment on price. We are not. We are not. I mean, we are governed by various regulations in various countries. We don't give price forecasts. But I'm glad you feel the same way, and I have heard many people feel the same way. As I said, we have to understand why gold goes up, and I presented the chart which spoke about expansion, uncertainty, and both. Those were the three reasons why people keep buying gold at various levels. Now, this is a case of uncertainty, and India will probably now seeing a little uncertainty, but India's case is long term is what? Expansion. We are going to become more prosperous. More people are going to come into the middle class, and there are millions of people, and that is going to drive demand. But price I cannot comment. Shouldn't gold be taxed on transactions tax and not on GST basis? As I said, we should just move away from this tax thing. The less we talk about taxes is a trade issue. Once we say we will do these, hallmarking we will do responsible sourcing, we will do this, we will do innovation, then we can go to the government and once and for all say that, look, this is what you should take from gold. At the end of the day, we should understand that gold is imported. It is loved by the people. There is 800 to 900 tons of demand. And we should take into account every stakeholder. Who are the three stakeholders? Trade, which is all of us. Consumer, and they want certain things, pure gold, etc. Government. Even if one of them is affected, it is not an equilibrium. That is what is happening today. Why isn't India moving more strongly towards domestic mining? Good question. I think we have recently in an ASSOCHAM Chamber of Commerce event also, there is a panel on mining. Some experts came and spoke, and they believe that there are about 620 mines which can be started immediately, and there are about 600 tons which can be done. I think it has to do with various issues around mining licenses. The mining policy is one thing which the Niti Aayog has also commented. But it is something which I would also like to see coming faster than it currently is. The role of Gold Council, I have told you, we act as basically we support domestic associations, we support innovation, we support training, we work on various policy matters. We also share a lot of data and analytics. That's our main role. We work with the central banks across the globe. And we make a case for gold. Are increasing gold prices correlated to recession coming up? Since you mentioned they are negatively correlated. Yes, absolutely. Are there any risks in investing in sovereign gold bond? Well, the risk is the gold price. You might actually invest at 38,000 today. If the gold price, whatever it is at the end of 7th year, is what you will get. But it is the same as a gold. There is no higher risk than gold itself, I wouldn't say. In fact, it gives you interest on top of it. What is the mining potential in India? Sorry if I have omitted something. I'm just going fast now. If you could change one gold policy in India, what would it be? Sachin, it's a very good question. If there is one thing, suppose the government says only one I will do next year, I would bring the gold spot exchange. I mean, that will change things for many of us. Do you see gold as a market mover or a commodity? Um, I didn't understand the question, but yes, I don't see it as a commodity. See, a commodity is a consumable, okay, generally. This is not a commodity. You may treat it as a commodity traditionally, etc. This is an investment. I mean, that way you can say all the paper that is on which the currency is printed is also commodity because it's paper. I don't think this is that kind of a thing. It is not consumable. So what is the mining potential? I told you 600 tons, maybe more. One expert, I mean, there were some experts from Australia, they say India has the same topography as Australia. They said absolutely, it says, even our Niti Aayog report says that it has the topography and even our the government body has said that it has mining potential. Our research showed that about 600 tons is already identified mines. See, in gold, what happens is first is prospecting, whether it is gold there or not. That is the longest time period. Prospected gold mines in India, about 600 tons. I want to start a gold refinery. Please advise me on things to keep in mind. I think you should contact the refinery association. There is a refinery association. They are better off in all these things. But I would only recommend that if you are starting, don't start anything because there is a 0.65% differential, because anything you do purely on tax arbitrage can disappear overnight. You have to do because there is a intrinsic reason, there is an inherent strength that you have in the refinery. What can industry do to keep handcrafting skills all alive over the historic centers? Well, we have given some suggestions. One of the things is also innovation. We have to absolutely innovate, bring the best of brains to innovate on the tools, on what they can do more, and all that stuff. I think that is important. Maybe convert, I'm just saying, I'm not forget, maybe convert GIFT into the biggest gold hub in India. Bring the manufacturers, artisans, spot exchange, everything possibly. I'm just quoting it as an example. Today we live in a world of marketing. How do you feel gold can be marketed better? Stop talking about prices. Talk about gold and how it adds value to the lady. Look at most of the things. Yes, occasionally price discounts do work, but only selling jewelry on the basis of price is an absolute insult to the artisans who are making the gold jewelry. But a single individual can't do it. That's why I said there must be a industry-wide movement to do this. If one person alone speaks about it, he is not going to be heard. How can standardization increase in the gold industry? Well, hallmarking, let us bring it slowly, and we'll also have to have a self-regulation so that those who don't believe or adhere to the standards are actually, the industry itself ostracizes them. I am a gold bullion trader. How can I market my silver and gold better to increase more sales for my staff? Well, I'm sure that you know more than I, but as I said, I think you should attend probably some skills course that GJ, Gems and Jewelry Skill Council runs on marketing, etc. Happy to take it, offline if there are some suggestions we could give. What is the best gold ETF to buy? I think there are 14 ETFs in India. All of them are there. Some of them are big. I think you can choose any of them. They're all governed by SEBI, so there is no problem about it. What is the best? Again, the same thing. If I buy e-gold, is there a chance of getting physical gold after a few months? Yes, there is a chance. You are talking about the digital gold, Safe Gold and MMTC PAN Gold. Absolutely. How can gold smuggling reduce? Well, the trade can take this thing that we will not, again, as I said, self-regulation. That's important. Of course, duty plays a part. What is the difference between gold ETF and gold fund? Well, one is when I say gold fund, I said you are talking about fund of funds, I suppose. They invest in funds, that is all. Can gold be used? I'm coming to the last 2 minutes. Can gold be used in the IT industry with new this thing? Yes. What are the key factors for success of gold spot exchange in India? Well, it's the government regulation has to come in and good delivery. Paytm has started selling gold. Do you feel buying lesser quantity but consistently is a smart option? Absolutely, I would say that. Who's the main voice of gold jewelry in India? That's what we lack. So thank you very much. I've just ended exactly at the 5 minutes to 5. So thank you very much. I hand it over to you.
Thank you, Mr. Somasundaram, for that very informative and interactive webinar. We also would like to thank the audience for being so proactive. We hope you've learned a lot from this webinar. I know I have. We hope your questions have been answered, but if not, please feel free to email them to us at info@gematlas.com. Thank you.
Thank you very much.